Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode features a different topic and a guest who shares their experience and knowledge with us. Tune in and learn something new with BankTalk podcast.
Hi, and welcome to Bank Talk. I'm Charlie Kelly, your host and partner at Remedy Consulting. What we decided to do for 2024, based on suggestions from our listeners, was to bring a few more bankers and heads of operations at community credit unions and just talk to them about what's on their mind, what they're dealing with, how they're thinking about things. You know, maybe for 2024, maybe that becomes a few less vendors, a few more folks that are actually have, sort of boots on the ground. So today we're going to talk about what it takes to compete digitally. With us, we have a head of operations for a $2 billion bank in the Boston area. And he's kind of agreed to share his opinions and, more or less, how do you compete with the Joneses? How do you compete with the Chases of the world? So without further ado, let's get to Bank Talk. Okay, welcome back to Bank Talk. Today I have with me John Karakoulides. John is the SVP of Operations, IT, Digital Banking at Village Bank. John, thank you for joining me.
Thanks, Charlie, for having me. It's exciting.
John, if you don't mind, why don't you just give us a little bit of background on sort of what you do for a living over there and, just maybe just a little bit of background on the bank itself?
Sure. So Village Bank, we're about a $2 billion community bank just west of Boston. Primarily, we're based in Newton. That's where our headquarters is, and a majority of our branches. We have 9 full-service branches. Again, most of them are in Newton. We have a branch in Wayland, and we just recently opened up a branch in Waltham, which is exciting. It's our first branch outside of Newton in some time. So that's an exciting step for the bank. But we're about $2 billion. Full service, pretty standard community bank. We take in deposits locally and we lend them out locally through traditional loan products and deposit products. So
okay.
Pretty standard community bank. I would say the market that we're operating in, just given where we're located, definitely tends to be on the higher age scale. So we're not dealing with as many 20, 25-year-olds. Our population in this market is really that 30 to 70 age range.
Okay. And head of operations is always different at just about every community bank I've had the pleasure of meeting. So give me a little feel for the role. Like what does your role look like over there?
Yeah, so I've been in my current role. I've been at the bank for 10 years, been in my current role for 4 years. So my official title is Senior Vice President of Digital Banking, Information Technology, and Operations. So really those 3 areas cover a lot of different functions at the bank. Obviously core operations, that's all of our in-clearing. Information technology is everything that I would consider to be infrastructure related technology. That would be our core systems and network, et cetera, security. And then also, a big part of my role has recently been digital banking, and that's really handling all of our customer-facing digital banking platforms, both desktop and mobile. And that's really taken up a lot of my time over the last 4 years, just given how important digital banking is in community banking and banking as a whole.
Yeah, great. Yeah, I hope we have an opportunity to get into that a little bit because I think that's a couple of things I wanted to ask you about. It sounds like you have some interesting things going on there.
Yeah, it's exciting, and everybody's dealing with a lot of the same issues and challenges, but it's definitely an exciting discipline and an area of focus for all institutions, especially coming out of COVID. Really, the need to elevate your digital platform has been really expedited for a lot of smaller community banks.
And the other question I have, kind of a bit of a side noted, but it seems like IT operations, digital, that seems to be, to some degree, one position at a lot of community banks these days. I'd say, back in the old days, maybe it was a COO with an IT person reporting to them. But today it seems like that the digital channel seems to be integrated a little more into the overall position, if that makes any sense. Is that what you're finding on your end, or is it
Yeah, it is. I mean, so structurally here at the bank, I have direct reports for each one of what I would consider to be each one of my functional disciplines. So I do have subject matter experts for each one of my areas
Okay.
of responsibility. So that kind of frontline, real subject matter expert still does exist at community banks. And in my case, overseeing it all, you're starting to see more and more institutions fold them into under one executive. And really, because there is such an overlap in those areas. I mean, if you're talking even something as simple as, the relationship between your digital banking platform and IT, most community banks, their digital banking platform is their core provider, core systems provider. So naturally, there's overlap between the two. So it's definitely, you're starting to see a little bit more of a shift of pulling them back into under one area of responsibility versus in years past, of institutions might have split them out.
Yeah, and I suppose that relationship with the whether it be the core provider or the digital provider seems like it's pretty ingrained into just operations overall.
Yeah, and then you lay on top of it, obviously project management, et cetera. And there's a lot of organizational disciplines that fall within digital banking, information technology, and operations that they just work hand in hand together. So it just makes sense to be on the same team internally.
Not good. Part of the reason for our podcast today, we had this interesting conversation about whether a community bank can keep up with, I don't want to call them regionals, but maybe you call them the Chases, Bank of America's, Wells, right? And how you can compete. And so you just had some interesting thoughts on, how's a small guy compete with a big guy, I guess, for lack of a better way to put that. But
one of the things that's always been a challenge, when you're talking to community bankers is, the big bank versus small bank mentality. And can small banks, I use the term small loosely, can small banks compete with the larger institutions just purely from a size, scale, and investment perspective? And in my opinion, it's absolutely critical that community banks, really of all size, really change that terminology of, how can we compete to we must compete. And that's very important. And because we are competing with all institutions, specifically in the digital space, we are all competing, both big, small, geographic disbursement, with all of these online banks. Some of those barriers have been broken down. So really every financial institution that offers similar products and services are direct competitors to ours. And consumers have shown that in many respects, products, checking, savings, loans are commoditized. I mean, we're all offering similar products or the same product, but really what can differentiate yourself from a competitor is your digital platform. So really that mindset of we are competing with Bank of America, even though we're much smaller, we don't have the same ability to invest in technology that maybe they do in terms of resources, but we have to compete with them and we have to find where we can be competitive and frankly, in a lot of cases where we're actually better than them. And we need to really leverage that within our business plans and our strategies. I think one of the comments I made to you, Charlie, when we were talking about this is, when I took over my role, one of the first things that I had said to our board and to the rest of our management team was, I don't view our digital platform as a delivery channel. And I think a lot of institutions do. They view traditional banks, it's brick and mortar retail, it's your lending department, whether that's residential, commercial, or both. And then you kind of just add on to a digital as a delivery channel. And I don't view it that way. And I've maintained that view since I took over. Is I really view our digital platform as a third business line. That's a shift in mindset. And I think until you have that shift, you're not going to be able to compete with the larger institutions because they do view it that way.
Help me out with that. So
yeah,
when you say that you don't really see it as another channel, just give me expound on that a little bit. And again, I'm thinking more of the mentality than anything.
Yeah. Here's a simple example I always use when I'm explaining this to our board or to colleagues. When was the last time that you saw a large bank, I'll leave them nameless, but a large bank advertisement that focused on a checking account? You rarely ever see that anymore. You do see it. You see it more direct mail, maybe targeted email marketing. But when you see, larger financial institutions advertising, most of the advertisements that you're seeing is focused on innovation and digital. My mentality, really elevating the digital platform away from being a delivery channel, just something that a customer goes to, like an ATM, viewing the digital platform more as a business line. If you have that mentality, in my opinion, you're going to invest in that business line as you do the others. marketing dollars as an example, asking this of my colleagues at other community banks, do you have marketing dollars allocated to promoting your digital platform? You do for retail, you do for your loan products. Do you have that for digital?
Yeah, what has the response been there? Do you think other community banks are thinking about it the same way?
I don't. I mean, by no means am I suggesting that I'm blazing a new trail here, but I think traditionally community banks have viewed the digital platform as a delivery channel, and I don't think community banks have viewed it as a business line, the same way that they look at the retail, brick and mortar retail, and as well as lending. And because they don't view it as that third business line, they don't view the investment across the board the same way that they do in those other areas. Whether that's investment in people, whether that's investment in marketing, advertisement, and just generally investment in technology can sometimes fall behind. So I think that, asking me the broader question, how do community banks compete with larger banks? Frankly, first and foremost, it's the mindset, changing the mindset to we are competing, to view it more than just a delivery channel. And then I think lastly, how can we leverage the community bank strengths to really differentiate ourselves and in many cases be what I feel strongly about is feel that we're better than those larger institutions, even though we might be smaller and not have the same resources that they do.
I want to go a little off script here from what we talked about before and see how good you are at answering on the fly.
Okay.
So we've had on previous Bank Talk podcasts, we've had quite a bit of conversation around this concept of an active user within the digital space, right? And conceptually, kind of go back to your concept of do you have marketing dollars assigned to the digital channel? Do you think about whether or not you have X number of digital users, or do you think of how many of them are actively using, say, bill payment, or how many of them are doing mobile deposit or those types of things? When you're tracking individually, what's the mindset inside a Village Bank?
I guess I'll answer that maybe a couple of different ways. I'll first start off by saying yes, we look at all of that, and I think that's one of the going back to your original question about how can we compete. I think we can be more nimble and really with the focus on data analytics, because there's a tremendous amount of data that becomes available to us as we push more and more people into digital. We look at all of that on a monthly basis. And the way that I've always viewed data analytics and within my operations function, I have a data analytics team, is specifically in this space. I look at it in its simplest form. I look at a top level measurement as my overarching guide to success or where I need to improve. And I just look at how many times people are going in holistically.
Okay. How many logins?
How many logins? So in my mind, I just say to myself simply, if I have X number of logins on an annual basis, and that number year 2 grows to X plus 20%, I'm doing something right. Okay. I don't know what that is. I don't know what that is, but I can say if I see growth in the overall usage, top line usage, I'm doing something right. Okay. And similarly, if I see decline, maybe I'm falling behind a little bit. After I look at that top line measurement, we do look at what I would consider to be user specific ratios. So we look at what we call active users, and then power users. And we have some, I'll say some proprietary definitions around how we look at those, but we look at active users and then power users. And then we also look at what I call application utilization. And that's really kind of your sub functions within digital. How many people are using bill pay versus a Zelle or, digital transfer capabilities, et cetera. And one of the things I always stress when I'm talking to people about digital banking data analytics is that there isn't one answer. And, I always use a simple example of this is bill pay. So if you look at a bill pay chart, and I'm just using this as an example, I'm not saying this represents us.
Sure.
If you look at a bill pay chart and you see decline in bill pay, your natural reaction is to say, oh no, we're losing bill pay users. We got to do something. We got to promote the product better. Where are we falling down? Why are we losing bill pay users? You can't view it that way. You need to figure out what the story is, because I would actually view that as potentially a positive if we've seen an increase in our digital transfer users and digital transfer volumes, because that would tell me that more people are going away from your traditional bill pay and moving more into the expedited payment platforms, which we're promoting frequently. Something
Found a
that
different way to move the money, basically.
Correct. So I bring that up is that when you're looking at utilization, looking at a single measurement can be very dangerous. It's really about looking at a measurement and trying to understand better why that measurement is what it is. And is there a counter story, both positive and maybe not positive, to explain that? And that bill pay is just a simple example.
Okay. No, that's a good one. No, that's a great example.
And the digital transfer push.
So when you talk about an active customer,
the
way the industry used to think about that, they used to say, okay, active is somebody who logged in the previous 6 months.
Yep.
And then as you go into the subcategories, whether that be check capture or maybe it's even something like direct deposit, might be something like check, bill payment, right?
Yep.
Any of those subs, you could easily say, okay, Charlie did log in, but he seems to be checking balances, right? He never went into anything else in there.
Mm-hmm.
And conceptually, the industry always used to think of the deeper that person goes, the more sticky they are. In other words, the less chance they have to leave. Do you go into that level? And I know this isn't a customer by customer deal,
right.
but I'm assuming you must have some analytics that think about it that way as well, more than just we had X number of bill pay transactions last month.
Right.
Is there any trend analysis done on just who the customer is and whether or not you should be promoting? We'll use bill pay as an example. Everybody logs into your online system, but nobody goes to bill pay. There may be some concept of, hey, maybe we got to go spend some marketing dollars to say use bill pay because we know bill pay is stickier. We know bill pay, if they're in bill pay, they probably don't leave and they're not jumping around quite as much.
Yep.
Between banks, that kind of thing. I'll stop there, but
I know that's traditionally been the view is that the more people have, the stickier they are. And if they're not, I'll say super sticky, meaning using everything, that, you need to do more to push that. I don't view it exactly that way. And I say that because, I've used this example in the past. If I had if I had a customer who logged into their online banking to check their balance every single day for a month, so they were touching the Village Bank digital banking platform for 30 times over the course of a month, is that person more or less sticky than somebody who logged in once and used bill pay to pay their mortgage on the first of the month? You start getting into a kind of a philosophical debate about kind of
analysis paralysis.
Analysis paralysis. So I don't exactly use it that way. So the way that we approach it here with my team is like I was saying, we look at those top line measurements. We look at really the trend of those measurements, because naturally you want to see things trending positively, even if it's small trends or small increases in trend. And then when we start looking at, what's been traditionally considered to be the stickier products, or what I call the ancillary products, like a bill pay, maybe like some of the credit monitoring solutions you see now, or the personal financial management, we do look at who's using those versus not. And then we promote and educate customers on those products. So for the customers that are using it, we promote the features of that product because maybe they're not using it fully. And for the customers who are not using it, we make it available to them, and we market it to them that it is available for their use if they decide to use it. So we have a little bit of a different approach on it. We don't view the ancillary, the lack of use of the ancillaries as
required to make them sticky or something.
Yeah, an extreme positive, because we've seen and we've seen this time and time again that our stickiest customers from a digital perspective are the customers who access it frequently and don't have any complaints. I've said it on a number of occasions when I've talked about the concept of a sticky digital customer. In banking now, in my opinion, both large and small institutions, customers are going to traditionally leave because a digital banking platform issue. Because generally speaking, we're all offering the same products. Our rates are relatively competitive. Product and service features on a deposit account, loan, they're very similar. So there isn't a lot of difference. But if your digital banking platform is falling behind or is creating friction, customers get extremely frustrated about that, and that will cause them to leave. maybe just the last point on that, and I think this is something that you and I talked about, which I think resonated when I mentioned it to you, is that bankers inherently are overcomplicate things. And when I talk to you about our mentality in the digital space, 98% of the customers, they just want a simple, clean digital banking platform that they can check their balance, they can move money around, and they can pay a bill. Anything above and beyond that gets overly complicated for 98% of the population. If you can do those things, you're going to be successful.
It would be interesting, and maybe this is a future podcast idea, but it would be interesting to do a post-mortem. And I know, exit surveys are not very easy, but,
Right.
for banks that leave, whose customers left them, right? First,
Yeah.
Naturally, the natural position is I wouldn't fill out a survey for you anyhow because I just left you, right? But outside of that, right, it would be very interesting to know if the trend in why folks are leaving has moved around at all. Is it to some degree, right? Deposits move around because of your CD rates, but physically leaving your bank of choice, right? The ones that do go, would be very interesting to know. And is it a digital experience? Is it you're not keeping up with the Joneses? Is it something else? As far as why they'd abandon the bank, it's got to be a negative experience in some way, shape, or form because it's painful to leave, right?
Yeah, I mean, I think if you asked most community banks and you asked them to paint a broad picture of customer retention statistics, strategies, et cetera, I think most community banks and the Village Bank is definitely part of that. If you canvassed our customers and asked them for feedback, even our current customers, they're going to talk about high touch customer service. They're going to talk about robust products and services. And then you're going to get the sprinkle of, viewing community banks not as sophisticated digitally as larger institutions. And my guess is you would hear that from other community banks is that provide the best customer service. We have great products and services. Our customers love us. We're out in the community, but we're always fighting this technology challenge against the bigger institutions.
Right. And to me, part of that is advertising, right? I mean, the big guys have a lot of time to be, wherever you're picking them up, on the internet or TV or wherever you're seeing them, they have a lot of time to show the latest and greatest, maybe the neatest feature. It may or may not be a feature that the average person is going to use,
right?
But that concept then of seeing them as a technology forward bank, I think, but I would expect that if I were to move over to one of those banks, I may not like the overall experience, but that if I'm there for that feature, there's, that it is what it is. But
we'll be right back.
If you're dealing with a technology vendor, consider giving Remedy Consulting a call. At Remedy, we're dedicated to helping our clients get the most out of their tech spend. If you're considering changing one of your major tech providers or are renewing a contract with a vendor, the Remedy team may be able to add some value. Our clients enjoy our deep experience working inside these major vendors, and that background helps us ask questions which eliminate headaches and expense for our clients. Sometimes that's immediate relief, in the way of your vendor invoices, and sometimes that comes in the form of contract language protection for a strategic move that you may want to make several years later. The group of experts at Remedy have years of experience in core systems, digital, mobile, payments, item capture, commercial banking, pretty much the whole gamut of technology for financial institutions. Remedy approaches the BankTalk podcast the same way we approach our client engagements. We always try to fill some knowledge gaps, but also just to have enough life experience stories to remain entertaining. So if you're renewing a technology contract or you have projects going on, just need another opinion, or a project manager from outside your organization, reach out to us at remedyconsult.net. Thank you, and we appreciate you downloading the BankTalk podcast. Now let's get back to our episode.
And that goes back to my earlier point about elevating digital to a third business line and putting the marketing and promotion behind digital is to my point is larger institutions, you're not hearing about a free checking account when you're watching the nightly news. You're hearing about the next best digital product or digital feature within their online mobile banking platform.
Yeah, that's an interesting perspective. Yeah, I didn't, I hadn't noticed that trend, but you're absolutely correct. As I think back on, maybe the last 6 months to a year of, because again, some of your advertisement just comes to you, right? Like you
Right.
didn't know you're listening to it, but
Right.
the more I think about that, that's very accurate.
Yeah, and that's important. And community banks have traditionally not promoted themselves as technologically advanced. It's always been viewed as a delivery channel, and that's the difference between a business line and in a delivery channel that I talked about earlier.
Yeah, and some of them, I would argue that some of them aren't, right? Not every community bank is technologically advanced, right?
Right.
Because I gave an example of a smaller bank that I was dealing with for quite a while, and they just basic login was really tough. Like,
Yeah.
I'd get logged out, and the most frustrating experience in the world, because it'd be the equivalent of me walking up to a teller line and having somebody close the window on me.
Right.
Like, I can't get in, so now I gotta go call customer support, and what should take 2 minutes for me to check a balance, became a 40-minute ordeal, and probably 10 or 15 of that on hold.
Right.
I mean, that's never a pleasant experience, and it is, I guess it is what it is, but my opinion.
Yeah, no, and I think you're right on with that. I mean, when we look at our digital platform, we do a competitive analysis on an annual basis, both against large and small institutions, and we look at gaps within our offering. And one of the main focus points that we had 3 years ago, it was not only just enhance the platform and what the platform has to offer, but it was also about how do we make the interaction with the platform frictionless. And I think to your point of people get frustrated when they can't log in, or they get logged out, or they go to do a transfer and it crashes, and that just causes a very negative experience. So the frictionless aspect is critical in that.
Yeah, that's a great perspective. So we spent a little bit of time talking about, you had mentioned this concept of the core provider is often tied to the digital provider.
Yeah.
And to me, as I think about these larger banks, to some degree, I think that you get to a level, you get to a certain size, and you no longer have to rely on a provider because you've customized the application to such a degree. May have started yours, but more than likely it started out as somebody else's, and then it's been customized to the point where it became Chase's, or it became Citi's, or whomever, right?
Right.
So I guess as I think about that, is outsourcing the development part of the problem or part of the solution, right? In your world, I would imagine that for the most part, the application that you've taken is off the shelf, and you need to modify it to get it to look and feel the way you want it to.
Right.
But that is a far different cry from having a whole bunch of developers modify every every item in the workflow.
Right.
Just give me your thoughts on that conceptual. Like, do you feel like you're behind the 8 ball because you don't have as much customization as they do?
I don't. I think the natural reaction for a lot of people in my position is, if I could only bring it in house, customize it the way I want to, I'll be in a much better place. And I personally don't agree with that, because I think if you looking again across all consumers of digital banking, generally speaking, 98% want to do the same thing. So
transfer some money, right?
It's very simple. Can they check their balance? Can they move money easily? Can they pay their bills? And maybe you add on a couple of the ancillary products. Hey, I want to check my credit score once a month, or whatever it might be. So the need to customize, although there's a tremendous amount of benefit in having that control, there's a huge amount of investment that's needed in that. There's a huge amount of regulatory scrutiny that would come along with that maybe you're not accustomed to. And you lose some of the scale that comes with having a service provider handle that for you. Now, that doesn't mean that you lose the ability to customize. We do. I mean, one of the things that we do with our core provider is we've elevated ourselves to be more of a leader in their customer base. So we're often beta testing, et cetera. But we're not in-house development. That works for some people. Obviously, when you start dealing with larger institutions that have a lot larger infrastructure budgets, et cetera, that's a value to them. But I don't see outsourcing development as as a solution. I view it the opposite. I view it creates a lot of unnecessary challenges because at the end of the day, I'm a banker. I'm not an application developer. I don't want to run an application development team. I'm a banker. I mean, that's what I do, and that's what we do at the bank. So going
And
into a
the
different
only,
area is a
I guess
challenge.
I guess the only thought I would have on that would be in the event that this technology was coming out every couple of weeks and there was something new all the time, right?
Right.
Then I would think then that, and certainly some of our customers at Remedy have said, I just feel like I'm handcuffed, right? I'm handcuffed because my provider has this list of things they're going to do for me, and the rate at which they put them out is just so slow.
Yeah.
That I kind of feel like I'm behind the eight ball from the perspective of what's on the roadmap.
Right.
Right. So,
Yeah.
to me, that'd be the only counter to what you might say is that you have to have a provider. I think that where the roadmap items are closing fairly quickly. You know what I mean? Like you're not waiting 5 years to close a roadmap item that if it's a critical
Right.
to you.
Yeah, no, I think it's a valid point, and I completely agree with you. And I'll say that at one point we were in that boat. I guess I'll make a couple of comments specific to what you just described. That speaks to the relationship that we all have with our core providers, and we have an extremely collaborative, positive relationship with our current core provider who handles our digital banking platform as well. That's a relationship that we continuously foster, and there's a mutual trust back and forth between us and them that they're providing us quality services, but we're also providing them quality feedback. And that's something that's very important. And I would just encourage people, if they don't feel like they have that, maybe it's time to look at a different provider because that's critical to the advancement of every organization. And that would be the same case if you were if you were developing applications in-house, because every application has underlying technologies associated with it. So that's critical, is that relationship with the core provider. My other comment would be within the space of we're behind and we're not able to deploy. Even if you are developing applications in-house, you're still going to face that challenge because most of the ancillary technologies that we're all using are supported, have backbones by other providers. So rarely do you get a company who develops a bill pay solution from the ground up.
Right. Yeah.
Or think about recent advancements in digital transfers. Zelle is an example. There is no community bank individually that's going to develop a payment solution to compete with Zelle that's actually going to compete with Zelle. So the only place that application development would help is I think more on the integration side, having the ability to better integrate some of these ancillary platforms within the online banking platform. But I don't think application development is going to solve that lingering question for community banks of am I behind, and I feel like I am behind because I'm being held back.
Okay. Yeah. No, and I think that's a good perspective. Even if it were your own, you were going to be behind anyhow, right? I mean, and this is just my experience in application development is that the list is always 100 items, right? So, and you may have a quarter of that funded at any point because that's just the nature of the application development. There's always something new and different that somebody wants. So,
well, and I also
that and developing and all that kind of stuff is that's a no-win battle to some degree.
Right.
You just got to choose your battle.
And one of the things I always say that, when we've talked about, this was years ago when we've talked about quote unquote being behind, I think a lot of that was and a lot of community banks, I would say, fall in the same boat. It's in a lot of cases, we blame our core providers, but in a lot of cases, it's our issue. As I said earlier, community bankers like to overcomplicate things. And I've seen it time and time again where, I'll sit down with a peer at another institution and they'll be talking to me about digital banking and they'll say, my digital banking platform does A, B, C, and D, but I would really like it to do something else. And because it's not doing that, I've held back from deploying a piece of technology or a feature. And I always say to them, I would rather take something that's 80 or 90% there, which frankly is probably going to meet the needs of the 98% that I keep referring to, versus waiting for something to be perfect to hit 100%. And I've seen that time and time again with community bankers of waiting for the perfect platform before deploying, which obviously delays time to market and naturally leads you to feel like you're behind. Whereas my feeling is I'll take something that's 80% because I feel that that's going to still add value to a majority of our customers. I wouldn't deploy anything that was obviously not functionally working or contained issues, but I would still deploy something that wasn't fully there because there's a lot of value.
Yeah, functionally.
Right.
Yeah, I get it. Yeah, and I would say I completely agree with you. The downside of a poor provider is, maybe it's that login thing we talked about, right? I mean, let's just talk basic login. If it's not up and running, you're behind, right? I mean, leave functionality aside. If it takes you 3 times to log in every time, and that's not user error, right? Then they're right. So there's probably some table stakes that we're beyond where you would say, I got to go change my provider because this they're putting me behind. What they probably are doing is losing you customers if the support and the uptime is not where it needs to be.
Right.
But from a functionality perspective, I would argue that you're right. The when it comes to new functions, I'd take the 80%er as well. I think in my opinion.
Right. And we're primarily talking about our traditional banking customers. I mean, I think where you've seen probably more of the development and or the investment in internal development technology is, when you start dealing with the larger commercial banks, because that can get a little bit more specialized. And with the commercial banking solutions that are needed for some customers, larger customers, that can get a little bit trickier. It's not always one size fits all. So,
no, that's good. All right, just a couple more questions, but
sure.
This is a question I've asked other guests before, but on the remedy side of our equation, we spend a lot of time talking costs and cost containment, and making sure you're getting your bang for your buck and all that. How do you think about costs? Do you understand the tech cost per customer? Because we had this conversation earlier about do I have a customer that is active? And then further, do I have a customer that is active in the subcategories?
Right.
Your check free, et cetera. Right. Do you have a way to think about what it costs to either onboard a customer and whether or not month over month, how much you have to make in order to afford just the digital portion of the customer? Right. Like, is that part of any of your conversations, or how do you think about that? Or is it just
yes. Yeah. So I do know what our costs are associated with onboarding a customer online. I know it roughly what it costs us to open in branch. So obviously you're dealing with the delta between the two. I think when you're looking at customer profitability, specifically in the digital space, that almost is impossible to really measure, because you start looking at how do you apply value to some of the non-monetary, kind of call them tangibles, that customers bring when they're using your digital platform. So it becomes very difficult. So we don't measure profitability at the customer level down to that level of detail. We do know the costs associated with it. When we build deposit product, we look at profitability of the product, relative to utilization, but looking at, the cost associated with digital user and is it quote unquote profitable, I feel it's impossible to determine that.
Because there's so many revenue side things you could be thinking of.
Yeah. So, I mean, just so going back to the data side, I mean, in big data, you've heard that term used all the time. I mean, I have a digital user that, let's just, for argument's sake, is logging in once a quarter, right? Mm-hmm. That customer is costing me X number of dollars every single month. If I take the deposit relationship and the loan relationship off the table, because I can easily quantify profitability based on their loan and deposit relationship. If I'm purely looking at digital, how do you quantify the value of all of the data that you're able to collect on that customer as they're using the digital platform? It's impossible. There's no way to quantify that. You know what I mean?
No, that's very fair. That's very fair. I guess where I was going, and again, you're not the only person that's answered it this way, but I guess when in my head, I think of it this way. I say, okay, if Charlie comes over to my bank, opens up an account and logs in once every 6 months, right? And let's say that costs me, I don't know, a couple bucks a month or whatever to put him up on the platform. Right. And he, keeps no money in there, right? That's sort of customer number one. And customer number two is one who logs in every couple of weeks, pays his bills, uses every platform I have, and therefore probably keeps 30,000 in as a checking account. Right.
Right.
Those two customers, just from a customer profitability, are significantly different. In other words, is there ever a time when you say the value of a customer that holds no deposits with me and no loans, but yet I've got to put up a platform for them, right? Is there a point where you kick the customer out?
No, never.
Never. Okay. All right. And that's a good answer, because
Yeah.
I've gotten that answer different ways, but
Yeah,
because again,
answer,
your hope is that you can cross sell them, or you can make them into more of a customer.
right. Yeah. No, I mean, my simple answer to that is never. And I always go back to examples of, we have a checking account that we developed a couple of years ago called the Compass checking account, which is based on it's a product developed for later teen, early adults, high school age, et cetera. And that is designed to promote financial literacy, get them exposed to banking. Those balances are going to be very low, and it's a very high touch from a banking perspective product. But we value that relationship, and there's no way that I can quantify that value and the financial literacy that I'm providing to that customer. So that's that kind of unquantifiable value that we put on our customers.
Yeah,
In the 10 years,
no, it's a great perspective. Yep.
the 10 years I've been at the bank, we've never kicked a customer out for not utilizing a digital platform, and absolutely not. And when we try to, we do look at costs. I know you and I talked about our Evolve checking account, which I think is a pretty innovative product. That's a really good example of how we view digital and the digital utilization. Obviously, the listeners benefit. That's a checking savings product that is free, and we give unlimited ATM reimbursement. We give 30 basis points back on signature-based debit card purchases. And if you use our online banking platform and qualify, we'll give you $5 a month back. And if you do none of those things, it's a free checking account. And that's been a wildly successful product for us, because we're incentivizing you for using that product, and it's free.
Yeah, and I think what I would say is, and maybe I just get your opinion on this, but it seems like in the event that you have sort of debt accounts laying out there, right? One of the positions seems to be not kicking them out necessarily, but doing one of two things. Number one, you could expire their login just to see if you ever, if they ever log back in. If they haven't logged in a year, expire the login, see what happens with it, right? The other method of trying to contain the costs for what I would call debt accounts are to provide request a minimum on that account, right? So it's $5 a month, and if there's $80 sitting there, it's been in there for 20 years, right? Eventually, that the $80 just goes away. So I think that there are probably better tactical ways to close out some debt accounts than just throwing the guy out, right, or whatever, or send them a letter saying you're done, right? That sending them a letter saying you're done is feels terrible. But if they send me a letter that says, "Oh, your account now is a $5 minimum," I'll figure it out myself, right? So I don't. Any thoughts or comments on that?
Yeah, no, I mean, and I think to my earlier point, I want to be clear on this, is that when I said we've never kicked a customer out for lack of digital usage, I think we all banks deal with the same protocols that are mandated by the state. So we have dormant account processes, and accounts sit dormant. We have to escheat them to the state. And so naturally, as part of what I would consider to be the legacy operations functions that exist at all institutions and are mandated by regulation, naturally those accounts get handled through that process. And that really has nothing to do, as I said, it has nothing to do with balance or digital uses versus not. That's just traditional banking law 101. If account sits dormant, we have an obligation per the state to handle that in a certain way, and we do. So naturally, that stuff works out over time, whether they're a digital user or not.
Okay, so that's about all I had for you. If I could ask you one more question, it would either be, give me the top couple of projects, maybe give me the top things that are occupying your mind.
We've made significant investments in the digital platform, so I think overall, I'm feeling pretty good about where we're at overall. Really what my focus is for the next, I'll say 1 to 3 years. Obviously, it's in the digital transfer space. I mean, you're hearing it more and more every single day. How quickly people can move money and the different payment streams and Fed Now, and so that's always going to be something that's top of mind, is staying ahead of the curve as much as I can on the digital transfer side of the platform. Really looking, I guess, secondarily at more advanced card management for the bank. So I think, obviously when you look at the digital platform, people often just think about their iPhone or Android, and that's digital. But when I look at it, I wrap into that our card portfolio as well. So how can we be better integrated with our card platform? And I think that leads to my third point, is integration, is trying to have more and more be really single source. So right in our online banking platform, because the minute you ask a customer to access a platform that's not within online banking, you're just not going to get success. So, really trying to keep as much under one roof as I can. And going back to my earlier comment, making that process seamless and frictionless for the customer. And we're always looking at fraud prevention, fraud controls. It's always top of mind for me.
Right. Okay, good. No, that's great.
Yeah.
And I think you hit some pretty good ones from a tech perspective as well. The conceptually, right? This money movement. I think as we talk to CEOs out there, and anybody even in the ops teams as well, it seems like this concept around where's money movement going tomorrow.
Right.
Not today, but is there something I might lose a customer because I'm not thinking about how they need their money?
Right.
Seems to be that seems to be, if you're talking cutting edge, that seems to be the way that people are thinking about that portion of it.
Yeah. And I think, when I talk about digital transfer capabilities, and we've talked about this multiple times with our core provider, a lot of institutions, get hyper focused on one platform or one solution. And one of the things that we've really focused on is giving our customers variety, because no customer is the same. And if you actually think about, your daily life, your need to transfer money from X to Y, that can change throughout the course of the day as well, and also change depending on who you're sending money to. So one of the things that we really focus on the digital transfer side is, without going overboard, we want to provide our customers as a whole with a variety of options. They might only use one, they might use them all, but that's their choice. That's not my choice forcing them into a platform. So
when you talk about customer feedback, where is that coming from these days? Is that, your customer service line, your teller line, is that happening elsewhere? Let's leave commercial customers aside.
Right.
Because I'm assuming they have a commercial loan officer that spends a bit of time with them. But, within the retail space, how do you get the feedback of, what's the next platform they need to be on, or why they need their money in a different direction? Or how do you get feedback to make yourself better?
Yeah, so I think we do it a couple of different ways. So one of the things is we have we're a small institution, so I don't want to make it seem like this is a large institution building channels across organization. We have direct lines from our customer facing staff directly to our digital banking team, and predominantly that's going to be your call center, that's going to be your frontline retail staff, and then obviously your frontline loan officers or lending staff.
Mm-hmm.
That can include servicing as well. So that channel, they exist, and we're constantly getting real-time feedback. I would say that feedback is traditionally more on the troubleshooting side and education. Hey, I'm trying to do a transfer and I don't know how to, or I got logged out and I'm blocked, et cetera. Like, we look at it that way. So that's less product service advancement. What we also do on a periodic basis is we'll actually send out a customer survey to our customers. And we really look at it two different ways. One, we have a survey that we send to our digital customers, those customers using online mobile banking. And the survey is very specific to digital. And then we also send a survey out to our customers that are not using digital. And that's really focused on, why are you not using it? So we look at those two different surveys to really try to get meaningful feedback from our customers. And then I mentioned earlier, we also do internally a competitive analysis on the platform on an annual basis.
So either comparing to other banks that are out there, or other.
Yes.
commercial other platforms that are out there.
No, other banks. So yeah, so we go on and look and say, okay, our platform has all of these features and functions, and here's kind of the experience that you have, within our platform, and how is this working at another institution?
Yeah, sure. Open an account over there and see what the functionality looks like and all that kind of stuff.
Yeah, and we look at we look at the larger institutions as a kind of a gold standard. So how do we stack up to a Bank of America as an example, and where are they excelling where we're not, and we capture that, and that really is a foundation of our roadmap looking ahead. Really the survey and that competitive analysis.
Okay, good. No, that's very helpful. Like I said, it's always interesting. I've got a couple of side stories that'll just would take this podcast for another half hour, so I'm not going to bother you with them. But no, that's great. That's a great perspective. Yeah, no, right. Okay, well, thank you, John. I think that's everything I wanted to talk about today. Anything we missed, or anything else that we wanted to cover that we didn't get to?
No, Charlie, I think this was great and good conversation. I appreciate the opportunity, just to talk digital and all things technology. So
it's been very helpful. Thank you. So that's it for Bank Talk. Hopefully you picked up a little something you can use in our conversation with John today. Digital topic there's plenty to it. So getting some perspectives of somebody who's spends their time thinking through it on a daily basis, I think is always useful. Thank you for joining us today. Have a good day and keep on learning.
Thank you for listening to the Bank Talk podcast, brought to you by Remedy Consulting. To reach out to John, go to village-bank.com. Thanks again, and we'll see you in the next episode.